Back in the action here once again. Always great to be back here with you guys. Hope you enjoyed your weekend, but it's time to get back to work though. We got a lot to cover here tonight in this video newsletter. It's Tuesday evening. It is October the 15th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, don't forget I help traders find high quality setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance for tomorrow, the best entry and exit points to keep your eyes on for tomorrow, and most importantly, how to avoid some easy losses in tomorrow's, that will be Wednesday's trading session. And we have quite a bit to talk about here tonight. We'll talk about the calendar here, of course. We'll take a look at the news scheduled for tomorrow. We'll get that all budgeted out so you know what to look for tomorrow and when to sit on hands. We'll also grab some charts here tonight. We get some oil, some S&P, some Nasdaq, and of course, we'll wrap up tonight on that yellow metal, that mighty gold futures. I'm going to jump in here first, though, tonight here to the crude oil. Crude is back to its tricks again. It's range-bound tricks again. Well, maybe not tricks, though. Ranges are pretty darn simple if you have a good strategy. Let's jump into that oil chart, that black gold, that Texas tea, and let's get this party rolling here. Now, of course, last time I checked, today is the 15th day of the month, right? So we're definitely watching rollover here this week. We'll talk about rollover on crude oil here as we go here throughout the video tonight. But the most important thing, though, is what do we know about the oil right now? We know we're bearish. We get that strong bear move down in the holiday session yesterday. And then as much as those bears, they tried to keep it going. They tried once, twice, 3 times. Now they really can't crack underneath yesterday's low, right? They little poke right through. So we know we're bearish. We're definitely not bullish right now, that's for sure. But I'm looking at this as a range, right? You'll notice the bears keep selling it high. The buyers keep buying it low. This is going to be a range-bound market with a bear bias. Now, that is really all the information that we need to know, because now what I can do is, whenever I know I have a range-bound market, I want to buy underneath the range. I want to sell above the range, and I want to avoid the middle, right? That messy middle right in the middle. Buy low, sell high, avoid the middle. Now, because of that bias, right? Because of that directional bias, the patterns that we'll use here to sell off the high are going to be a little bit different than the patterns we'll use here now to buy off the low. So slightly different setups to buy low and sell high. We'll talk about those setups in a lot more detail right as we get into the video tonight. How about a breakout? Are breakouts possible? Absolutely, breakouts are possible, right? How do we break out higher? How do we break out lower? We'll talk about breakouts, and we'll also talk about some of those traps to avoid so you don't get chopped up right inside the middle of that trading range. We're going to break this down into all the bite-sized pieces for all you oil traders here, so make sure you stay tuned for more on that. How about some S&P? S&P get a nice boost from earnings here, came out early this morning. Brexit seems to be looking good for now, right? I wouldn't get your hopes up too early here, right? Deadline looming. So Brexit stuff, right, supposedly pushed these markets higher. Corporate earnings coming out today, right? Earnings season pushing this market higher. The bottom line is, who cares about the why? All we know is what, right? What? Nice big bull run higher. What do we know right now? We're sitting right around that big round number. Now, if you've been following along on the S&P, this is kind of par for the course, right? 3,000 has been a big sticky psychological area here for quite a while. This is, you could say, the opposite of what we're dealing with on oil, right? Oil has that big move down into a trading range. This one's kind of the opposite. It's a big move up into what looks to be like a range here to me, right? We go up, pull back, double top, pull back, bounce. Looks like a range to me. Now I can take that range. I want to buy underneath it. I want to sell above it. I want to avoid that middle, don't I, right? Okay. How do we do that? I want to buy underneath that range. I want to sell up above that range. What about these specific entry patterns? We're going to break those down into small bite-sized pieces. We'll talk about the right patterns, buying as we break out, selling as we break down. How do we trade a breakout? How do we fade those breakouts? You know me, I'm always want to try to fade the breakouts on range-bound markets. We'll talk about how to find the right timing to time those breakout failures here on the S&P. And then, of course, with the Nasdaq. Now, Nasdaq has kind of, well, it's very similar to the S&P here tonight. You can definitely see we're obviously bullish. I don't think anybody can look at this market right now and call this a bear market. We know we're bullish, and we have honestly one of my favorite, really one of the easiest chart patterns to learn, and that is a strong spike up, a pullback, an obvious higher high here into a spike in channel. Now, spike in channels are really, really powerful patterns because they pretty much tell me exactly where to look to be a buyer. Now, sometimes these areas here are really deep pullbacks. So because they're deep, sometimes those entries can be a little bit tricky to kind of time your entry properly on a deep pullback. We'd like to buy deep pullbacks because obviously it gives a good risk-reward ratio, but trying to time the entry on a deep pullback can really be challenging. So we'll talk about a couple different scenarios to think about whether we get a shallow pullback or a deep pullback. My biggest concern, though, is I've got 1, 2, 3 big levels up here. And, you know, much like oil, how oil went up, right? And then it starts going sideways up here. I wouldn't be surprised if we start seeing a range up here. We'll talk about kind of how to spot a range, what to do with the range. We'll talk about that in a lot more detail. I think that range is likely for tomorrow. However, what if we keep going higher? You know, S&P's got 3,000, Nasdaq's got 8,000 on its radar here. Can I buy this thing as it goes higher? You can, but there are 2 patterns I'm looking for. They're very specific because, as you can see, we've got a bunch of resistance up here, and I don't want to be buying into resistance. So we'll talk about the good, the bad, and the ugly here on the Nasdaq. If it pulls back, if it ranges out for us, or if it keeps going higher here. We'll also talk about if we get a reversal and what a reversal might look like on the NQ tomorrow as well. And then, of course, wrapping things up here on the gold tonight. What do we know about gold? Gold might just be the trickiest of all of them. Gold is kind of in a wait and see environment right now. Here's why. We spent most of the time here. Yesterday, of course, was a low volume holiday session, as you remember, right? We came in this morning kind of bouncing around all of those, you know, tops and bottoms of that range. Well, you know, usually a range-bound market says buy low, sell high, doesn't it? But look what happened. It completely breaks down. That strong move down, I've really got a feeling here right now we're going to get a run back up into that trading range. The problem is it's such a strong move down. I've got to let these sellers kind of, you know, in quotations, get it out of their system first. And you probably know what I'm talking about if you tune in every evening on this newsletter. So I know we're bearish right now, but I have a funny feeling we might find our way back up into that range. Range-bound markets have a tendency to drag you back into that range, right? And so because of that, I've got one very specific pattern I'm looking for here to be a buyer going back up into that trading range. I've also got my eye on a possible reversal down here. We'll talk about a possible reversal, and obviously we're bearish. I'll talk about what I need here to see this thing going short because there's a whole lot of support down there at that 78 area, and I really don't know if we're going to get a lot of bears there that really take that bait down there. So we'll talk about how to sell it. But more importantly, this is one of those scenarios where we may not have the bulls in control right now, but the writing's on the wall here to keep your eyes open for a buy-side setup. I've got 2 buy patterns, and really I'm waiting for more for a sell here. And not to worry, we're going to break down the yellow metal in a lot more detail here tonight on this video newsletter. Now, before we jump into those charts here tonight, though, I always want to remind you guys, make sure you join our mailing list. You may not be aware of this, but just before I publish our video on our YouTube channel every evening, I send off an email to everybody on our mailing list, and I want you to get that email. That way you know every evening when our nightly newsletter goes live. And all I need from you is your first name, a real email address, okay? I need a real email address here, no funny business there. And then hit that subscribe now button, okay? And then don't forget, when you subscribe to join the mailing list, your job isn't over just yet. You got to go in and check your email inbox because I'm going to send you a welcome email with a little verification link in there. So find that verification link, verify your inbox, If you don't, I'm not going to be able to send you emails there, right? And don't forget, sometimes that email gets stuck in your spam filter somehow. So check your spam filter, and if you find anything in there from School of Trade, make sure you add us to your whitelist, right? Drag it, drop it into your inbox, right? Safe senders list, whatever it takes in your email device to make sure you always get that good stuff in your email inbox. And then how about questions here tonight? I know you guys have great questions. You always have such great questions. If you have any questions, any comments, any feedback, any constructive criticism, I'm always listening. All right, I'm always listening. I got some pretty thick skin on me from trading these markets almost 15 years. Okay, you really can't say anything that I haven't heard before down there, but I want to hear from you, right? What questions do you have? How can I answer questions? What feedback do you have? Drop me some feedback in the comments section below. What do you love about the video? What do you hate about the video? I would love to know your honest feedback. I'd also love to help you and answer more questions in the comment section down below. So drop those questions in, drop that feedback in. Don't hold anything back. I want to make this video better, so always send me that feedback if you have any. And while you're down there, guys and gals, do me a big favor and hit that thumbs up button. If you tune in every evening on this video, if you get value with me every evening on this nightly newsletter, if you learn a lot with me and you see value in it, hit that thumbs up button for me tonight on the YouTube video, because believe it or not, every time you hit that thumbs up button, YouTube rewards me by helping expose this video to other traders who definitely would love to learn a high quality, reliable trading strategy like we use here at School of Trade. So guys, drop those comments in, smash that like button if that's your thing, right? Don't forget, drop that comment in there, hit the like button, right? And I always appreciate your time. And don't forget too, I realize that most websites are all automated robots and chat widgets these days, but I'm old school. I've been doing this for a long time. I actually talk on the telephone. I actually kind of enjoy it. I really enjoy it when you guys and gals call the office, ask a bunch of questions. You know, just this morning I talked to a new client who was wondering about the best charting software, data providers, right? Best brokerage fees right now. I can help answer all those questions. I can also help you get access to our free trading classes or our free pass to our trade room. So don't be afraid to call that toll-free phone number. Use that live support tool, because I'll tell you, my wife Megan and I are always here in the office. We love talking to you guys. Promise no call centers, no wasting your time on hold. We look forward to answering the call, answering all your questions. But in the meantime, though, we got some work to do here tonight, don't we? Let's roll those sleeves up. Let's get to work. Let's kick off tonight's video by talking about the calendar here for the rest of the week. Now, as you remember, right, or maybe you don't, but Monday was a holiday, right? Monday was kind of that half holiday, as I call it. It's a federal holiday, but not every state recognizes it. You know, some states have parades, banks are closed, other states don't. It's kind of a half holiday. The markets were open on Monday, as you saw, but very, very low volume, which is why I try to stay away. My rule of thumb is anytime the kids are out of school, anytime the banks are closed, right? Anytime there is as you can see here, no major news on that federal holiday, you definitely want to be, right, aware of that lower volume. So we took the day off on Monday, came back, of course, today. Now, when we take the day off on Monday, everything gets pushed back 24 hours. So, for example, we normally see the weekly petroleum status report on Wednesday. That gets pushed back 24 hours to Thursday. So a lot of the stuff that happens on a Wednesday will not happen tomorrow. It'll be pushed back to Thursday morning's trading session. So knowing that, what do we have here as we go into tomorrow's trading session? We get some retail sales. Bright and early at 8:30 Eastern time. Now, when I think retail, I think tech, right? I think Nasdaq. So definitely you're thinking retail sales tomorrow will have an impact on the Nasdaq. I would also think gold. You know, a lot of electronics, a lot of metals markets, okay, so retail sales. It's not difficult to make the assumption that a big, heavy retail sales number tomorrow would probably be, right, would probably be good for the price of really all the metals, right? The aluminums, the platinums, the gold, the silver, right? We, of course, trade gold in our trade room. So retail sales is definitely on our mind for tomorrow, especially markets like gold and the Nasdaq. As we go later in the day tomorrow, we get a big block of news there at 10 o'clock tomorrow. Now, 10 o'clock can consistently is a very big volatile time of the session. So I always try to hone in on times when there's some news right around that 10 o'clock hour. We've got some of that tomorrow. The business inventories, the housing market index. Around that 10 o'clock, we call it the 10 o'clock shock, we almost always get some good movement, and that movement oftentimes leads to reliable setups. Don't forget, too, tomorrow afternoon, the beige book comes out tomorrow afternoon. Everyone's looking forward now for the end of the month regarding the Fed and rates. So this will definitely has potential to be a market moving event. As you recall, last week we had the Fed speaker Powell. Okay, he was talking about cutting rates again before the end of the year. Will it happen in October? Will it be in December? That beige book will be on everyone's mind to figure out, right? Try to kind of piece these clues together as far as what they're going to be doing. We expect that to produce a market moving event, something that will be a potential trading event here for tomorrow. So big, three big chunks here tomorrow. Retail sales at 8:30, 10 o'clock shock, and that beige book, right? Again, now normally afternoon news isn't that big, but because we got the rate cut, potential for the rate cut coming later on this year, we know most folks will be tuning in there for that beige book at 2 o'clock Eastern time. And then, of course, we'll come back and we'll plan out, right, Thursday and Friday. Now, like I said earlier, we are anticipating a rollover on crude oil, probably either on Friday or maybe the following Monday. I would imagine that rollover on oil will be on the 18th. Anytime, just so you know, every time the 15th of the month rolls around, okay, so anytime I notice it's the 15th of the month, I always start thinking about rollover on crude oil, right? Rollover on oil. Because what you'll notice is oil typically rolls over at some point before the 18th. The way it looks right now, probably going to be the 18th on Friday. We're going to be keeping a close eye on that as we go throughout the rest of the week in our trade room. All right, speaking of trade room, let's grab some charts here now. Now we know what the calendar looks like for tomorrow. Let's break this down and look at the charts, because in all reality, all that really matters is what you see in the price action. Everything else is just a distraction, right? The news is noise. The politics are noise. Everything else is noise. And, the news media likes to make it seem like the news is what moves these markets. But in most of the time, it's the technicals that really tell us the where, the when. They may not, right? They may not be as fun to talk about as the news headlines, but technicals are really where everything comes from. And what do the technicals tell us right now on the oil? Well, first of all, again, we said in the introduction, we know we have a bear bias, right? That bear market into a trading range. Moving average flattens out, right? What goes up comes back down. What goes down comes back up and down we go like a yo-yo back and forth. This, of course, now becomes a trading range. Range-bound markets tell us to buy low, sell high, and avoid the middle. The size of this range, it's a relatively wide trading range. Because of that, I've got relatively small sell zones overhead and buy zones below. So keep your eyes open. Keep your eyes open on the sell zones overhead and the buy zones underneath. And ultimately, my rule of thumb, whenever I have a range-bound market, buy low, sell high, avoid the middle, is to focus on what I call failure patterns. Let's talk about failure patterns here for a moment, because failure patterns are really, really common. Again, buy low, sell high, avoid the middle. Now, we know there's an overall bearishness to this market right now, which means I can be a little bit more aggressive selling above the high than I can be buying under the low. I think that makes sense, right? You're going against the trend, being a buyer right now, right? Going with the trend, being a seller. So if I want to be a buyer, we're below the range right now. If I want to be a buyer right now, back up into that trading range, what I want to do is I want to use what I call a failure pattern. But this failure pattern will be a little bit less, a little bit more conservative, let's say, because we're going against that trend. As we go lower, I'm willing to bet that sellers are probably going to try a couple times to sell that pullback. And when they do, once I see them trying once and trying twice, I'm going to look for a chance to be a buyer back up into that range. I call this a nested variation of a failure pattern. It's called a nested failure pattern. In other words, as we go lower, The sellers, of course, now who think this market is a bear market. It is a bear market, but you're underneath that range. We don't want to sell low. We want to buy low. That doesn't mean, though, I can get really aggressive. I still have to give those sellers the benefit of the doubt. They're probably not going to give up after one try. They'll probably try twice here. And as they try twice, I now know where their stops are, and I can buy now right back up into that trading range. Now, as we go back up to the other side of that range, though, now, again, because we have that overall bear bias to it at the beginning, what I can look for at the highs is let the market try to break out higher, get that moving average coming over. I always love it when we get buyers who try to buy a breakout pullback above the top of a range. Rookies love breakouts. What they like more than breakouts are breakout pullback patterns. So as we go up above that high of the range, imagine now those rookies coming in and trying to buy that breakout pullback. It's not a bull market, first of all, and it's definitely not a trending market. It's a range. We're above the range. I want to sell above the range, and to do that, I'm going to look for that combination pattern, that failure into that pullback combination. Okay, beautiful combination set up off the high of that trading range. So that's what we're looking for here tomorrow. I want to buy low, I want to sell high, and I want to avoid the middle. To buy low in a bear market, I want to wait for that pullback to the moving average, let those bears try a couple times, and then buy it after they try not once, but twice. Then you'll have the green light now, the confidence that all the sellers have all been roped into that short. And now once they hit their stops, that market will usually jump right back up into that trading range. As we go back up to the range, though, now I wait for that breakout pullback pattern, right? I look for that strong move up. I look for those buyers to come in now and try to buy off that moving average pullback. We know where their stops are. It's not a bull market, at least not yet. It's also not a trending market. Anybody trying to buy a breakout pullback up here is asking to get their pockets picked. And of course, look for that failure into that pullback pattern, going back down into that trading range. The hardest part is honestly if we just sit inside the middle. If we sit inside the middle, wait for that one try, that two try, failure, wait for that one try, that nested failure, and just keep doing it back and forth here while we have the bears in control. Now, how do we break out of this range? What's a breakout look like? Breakouts have a very specific entry pattern or a specific pattern. I call it a 1, 2, 3 breakout. And the name is just like it's basically describing what you're looking for. For example, let's say we go back into that range right now, and a strong move up, moving average comes over. I'm looking to sell that failure, but we hold the pullback and we jump off the moving average. Okay, this is called a 1, 2, 3 breakout. 1 is the strong move up, 2 is the pullback to the moving average, and 3 is the breakout, right? That is the breakout. That is a successful breakout of a range. Doesn't matter what direction it is or market it is. I'm going to mark up that high. I'm going to mark up a new trend line off the new higher highs. That's the secret. And then bring that down and create this hidden channel. That hidden channel right where these two connect is the sweet spot. Okay, we don't always get the pull back to the sweet spot, but we usually get a pull back at the very least into the low of that channel. The low of that channel is where you want to be looking for that buy. Where'd my target be? At that point, my target is back up around those highs, around 55. If they want to keep on going, it's a long distance above, up to that 50, 56, 60 area. So 55 makes for a great target right now for those bulls. But what about the bears? How do we get going lower here? This is where things get more challenging because now we got to worry about that 39 area. It wouldn't surprise me at all if we make a run down and then back up after that nested failure pattern. Okay, we've got to get through that 39 area or else we're going to constantly be looking for the one try, the two try, and buying it right back up. Now, where would they be trying to go? 51, 39, 50, 98. These are the next technical levels of support below us. And so what do we need? We need a 1, 2, 3 breakout. We need to see a strong move down, a pullback to the moving average, and we've got to see proof that they can get through that 39 area. Because if we don't, if we just sit there, right, 1, 2, all of a sudden now buyers are going to have a field day buying back up into that trading range. I want to see a strong move down. I want to see a pullback to that following moving average, and I want to see a nice strong jump off that moving average. Once we get it, draw that new trend line, find that new hidden channel, mark your sweet spot, and we're going to sell off the top of that hidden channel. I call this a 1, 2, 3 breakout into a hidden channel pullback. We see these nonstop, right, in our trade room. Lots of examples of this on every different market. So those are the two basic ways we're buying and selling this. We're buying low, we're selling high with failure patterns, and we're waiting for that 1, 2, 3 breakout. Now, if you're here for the first time today, you might be wondering what those breakout patterns actually look like, right, on a market that's already had a breakout. So what I'm going to do is I'll give you a link up here. I'll put a link in the upper right-hand corner for you to register for our free trading course. Our free trading course has hundreds of examples of all of these patterns that I'm talking about right now. So if you're here for the first time today and you want to get a much deeper dive into everything we're talking about tonight on the video, not to mention, you'll learn the 3-step strategy, you'll learn my 4 favorite entry patterns, and most importantly, you'll see hundreds of examples inside the members section of the free course on how these patterns look on a chart, right? So grab that free course in the upper right-hand corner. If you're on the blog right now at Sideways Markets, I'll put a big red button for you below the video tonight on the trading blog. So grab that if you're on the blog, or if you're here on YouTube, it's in the upper right-hand corner is for that link. And don't forget, when you register for the free course, I'm going to email you a welcome email. Sometimes that email gets stuck in your spam filter, so make sure you check your spam filter if you don't see that welcome email for your free trading class. Let's keep going here. How about some S&P? Like I mentioned earlier, the S&P is very similar to oil in a sense that it's a trending environment and then into a range environment. Okay, oil was bearish into a range. The S&P is bullish into a trading range. So we know right now the bull bias says be a buyer. It says be a buyer. Be a buyer where? At levels of support. Well, where's a good level of support? If I take this range is telling me what? Buy low, sell high, avoid the middle, right? Buy low, sell high, avoid the middle, okay? So we know we've got the range there. The range also gives me my buy zones below and my sell zones above. You will notice there's a little different way I'm drawing these ones, right? This range is not very wide. This is kind of a regular range on the S&P. That means we use our typical range expansions. On the oil market you saw earlier, you probably noticed that range was much wider. And because of that, we use smaller buy and sell zones. We'll go into a lot more details of those inside of our intermediate classes, our technical analysis classes here at School of Trade. But rest assured, though, same basic technique. It's just the size of that range that determines the battle zone below and the battle zone above. What do we do in a range-bound market? Buy low, sell high, avoid the middle. But what else? We focus on failures. We focus on failures. We wait for the market to try to go lower. We wait for that failure and whoop, right back up into that trading range. Now, one thing I'm watching right now is I've got this reversal line down here. Okay, I've got this reversal line. Now, we talked about this, I believe it was last week, whenever you have these real kind of blow off, kind of runaway moves that never pull back. Notice how the market never pulled back. It didn't pull back until it was in a range, which is basically the end of the morning here this morning. So I'll bet there are a lot of people out there that are still waiting for some sort of pullback here. And that means to attract enough buyers into this market, we may have to get a really deep pullback. So let's talk about a couple different ways to do this, right? Because there's really 2 different spots I'm watching right now. One of them is this little trap below that 89.5 area. The other is that reversal line. Both of those, you'll notice, are inside the buy zone. You'll also notice that one of the buy zones, I'll just put this a little bit darker for emphasis, is different than the other, right? There are actually 2 buy zones here, one here and one there. Think of those different buy zones as your biggest clue as far as what type of entry pattern you want to use to buy it going back up. We want to be a buyer going back up. But if the market pulls back, for example, into the first area of support down here, again, I got my eye on that little trap below that 89.5 area. In that situation, it's not a very deep pullback. Therefore, the sellers in the market are not going to be really confident trying to sell this pullback. And so what we'll do is we'll wait for the bears to come in and sell off the moving average. But there probably won't be a lot of sellers in the market at that point. It's not convincing enough. So at that point now, what I'll do is once I see those sellers, right, once I see this thing try to go lower, I'll wait for the pullback to the moving average. I'll wait for those sellers. We assume they're rookie sellers here selling that pullback off the moving average. Once we have those bears committed off the moving average, now we know exactly where their stops are. Okay, we know where their pain starts now. Now we know where bears get in trouble, and now we know we can buy right into those stop losses. Now, don't forget, this oftentimes pulls right back into a combination setup. Okay, it's going to be a failure into pullback combination. So failure pattern off the low into a pullback as we go back where? Where's my target? Target's back to retest the high. And then I would definitely leave that runner up around, right, that trend line, right, coming overhead, right, that kind of trend line waiting there overhead. Great targets waiting overhead. But that's if we only get that shallow pullback. What if it really pulls back deeper? If it really pulls back deeper, and again, I mentioned earlier, because of that kind of blow off there, just kind of the way the market moved this morning, we may get a real deep pullback. There are a couple things you want to think about on a deep pullback. One would be a two-legged pullback. Okay, mark the trend line overhead, up and over, and buying there. So maybe we get lucky and get that two-legged pullback, or as I call it, a 2LP. Okay, that's one pattern we're watching for tomorrow. The other pattern here is going to be if we don't get a two-legged pullback, we do get a real strong move down now into that secondary buy zone. Now what's going to happen? Bears. The bears are not going to give up very easily now. They're going to think this market has reversed. And even though it hasn't reversed direction yet, because we haven't seen the right pattern yet, we still have to give the bears the benefit of the doubt. They're going to try once. They're going to try twice. And then we can have the green light to be a buyer going higher. This is very similar, we talked about earlier on the oil, right? It's called a nested failure pattern. Now, again, I want to repeat this because it's very important. A shallow pullback, I can be relatively aggressive on this because I know that there aren't going to be a lot of sellers that will be stuck to this one, right? You're not going to convince a lot of sellers to take control of this market. We can basically trade a classic failure into pullback combination. But if it really tumbles, then you want to think, okay, you're probably not going to be able to shoo away these bears that easily. And so now, after once, twice now we're buying it back up. Very small, little subtle difference there. Very big difference, though, in performance when done correctly. Okay? Don't forget, keep away from that middle, right? And oh, by the way, what does reversal look like? Reversal, strong move down. There's 1, 2, and 3. 1, 2, 3 breakout, 1, 2, 3 reversal. Strong move out, pull back to the moving average, strong move off the moving average. Remember, a strong move off the moving average is actually when this market turns. It's not the strong move down. We get lots of strong moves outside of ranges, and they wind up right back up into that range again. So even if we do get a strong move down, promise me you're not going to get too aggressive trying to sell that pullback. Okay, that first pullback oftentimes fails. What I'll do is I'll wait for that completion, mark up that low, find that, you got it. Now we can sell up off that hidden channel. Does that make sense? Right? It's that hidden channel pullback. And then where's your target? Pretty easy, back down to retest those lows at the lows. So that's the easy stuff. Okay, the hard part now is what if we go higher here? Okay, going higher, I think it's a pretty good idea right now to know where you are. Okay, you're right above that big round number now as we try to go higher. We've got a level of, where is it? There we go. Level at 3012. But that's just a little guy. The big guy or big gal up there is 30.24, and above that is a 30.30 area. Okay, these are the all-time highs. So if things keep going the way they've gone today, right, we may be up within striking distance of those all-time highs again. Again, the all-time high is not the 30.24. I think it's like 30.31 or something like that. I can double check. It's not that big of a deal right now. What is a big deal, though, is as we go higher, knowing where they're trying to go. Right? Knowing where they're trying to go. So if we have another big rally, again, like I said earlier, got a lot of earnings coming out this week, and so we may see those catalysts kick into gear here for tomorrow as well, especially if the Brexit kind of optimism continues tomorrow as well, right? One good tweet regarding China, right? One good announcement regarding the Brexit, and one good corporate earnings report, and we could be right back up to those all-time highs again. But how do we trade it? First of all, it's a range. So didn't you say we could sell this thing? How do you sell in a bull market? You want to look for that nested. Now, this is not just any bull market. This is a pretty strong bull market right now. So as we go higher, how would I sell this? What I look for is I'm going to look for a crown reversal. Okay, crown reversal. We go up. Here's what it looks like. You want to see a pullback, a lower high, a trap low, and a trap high. Okay, I realize it's a mouthful right there, but that's what you're looking for. Okay, you want to see a strong move up. You want the buyers try to buy it once, lower low, buyers buy it twice. And the one big difference here is because it's such a red hot bull trend, okay, I don't want to fight that momentum. I want to look for that trap high, try to use this resistance area. Honestly, though, that resistance trend line will not be enough without an entry pattern. It's not enough to sell at resistance in a bull market. You need a really reliable pattern because you're going against the trend. It's not like on oil where it was kind of a range at the beginning and just kind of bounced around all day. This is a very strong bull trend. So be careful if you're trying to be a seller on this above these highs. Okay, I call it a crown reversal pattern. You'll see a lot of examples of those inside that free course linked up in the description of this YouTube video. But what if we go higher here? Okay, there are two ways to buy it. How do we buy this market as it goes higher? First of all, if it does go higher, I want to make sure I'm getting in before we get up to that 30-12 area. Okay, that should be pretty easy. There are two patterns. One of them is a 1, 2, 3 breakout. Okay, just like the others. Strong move up, pull back to the moving average, break off the moving average. Mark the high, mark the low, mark the sweet spot, buy the pullback, right? Buy the pullback. Okay, find that 1, 2, 3. Again, it's a 1, strong move up, 2, pull back, 3 is that move higher. Do not just buy that breakout pullback. Breakout pullbacks are not reliable this high up on that chart. What else could you do? What if it really jumps? Okay, what if it come out in China, right? News overnight, big jump higher here. Okay, as we go higher, 1, try for the bears. 2, try for the bears. Look for a trap low. That's your aggressive entry. We call this the FOMO breakout, okay, or the 2-try breakout pattern. I call it the FOMO breakout because that strong move up is so strong. Everybody gets FOMO. Everybody wants in. Nobody wants to miss that move back up to those all-time highs again. Maybe we get lucky. Maybe we get a chance to use that trend line. I didn't really draw it that way on purpose, but maybe we can use that trend line as that level of support. I want this, though, to be make no mistake, this move higher needs to be very, very strong as it punches higher. And again, where are they trying to go? They're trying to get back to the retest those all-time highs again, right? That's what they're trying to go here. And, it definitely could happen. But for right now, though, this market looks pretty comfortable right around that 3,000. We're looking for the pullback. Will it be shallow? Will it be deep? Will it reverse? Only time will tell right now, guys. And don't forget, everything I've talked about here so far, I'm going to go into a lot more detail on that free course, which, again, there's a big button for you if you're on the blog here at Sideways Markets. Grab below that video. How about some Nasdaq here? Now, Nasdaq may end up a lot like the S&P. It may end up going sideways up here. But for right now, though, you got to think the S&P's back to 3,000. I don't see why the Nasdaq couldn't be back to 8,000 tomorrow as well. That is very much an educated guess right now. Be aware there is nothing technically speaking right now that would tell me we're going back to 8,000. So please do not take that the wrong way. But it's definitely possible. It's definitely potential for tomorrow the way this market jumped. What do we know about the market right now? We know we're bullish. And we know we have really one of my favorite patterns, really probably one of my top 5 patterns. If you're a rookie trader, this is a pattern you want to learn. Starts off with a strong spike higher. Okay, that strong spike then pulls back and makes a higher high on the chart. Once you get that higher high, draw a trend line off those highs. Okay, then bring that trend line down and mark your low. Now, oftentimes, if you get these early enough in the day, you can get in off that pullback right away, right? That pullback is usually pretty darn reliable. It's very similar to a 1, 2, 3 breakout. However, as you get later in the process, the market begins to get too high for buyers to stomach. Remember, it all started off with a big blast higher, okay? And all we're getting are relatively shallow pullbacks here. So after you get a couple pullback, right, 1, 2, after you get a couple pullbacks off that channel low, we oftentimes start seeing the market look for a better price to buy at. And that's when we see that big dip back. Now the big dip we usually see is right into the battle zone here, the base of that channel. Okay, so think about it this way. Strong spike up, pull back, higher high. We mark up those highs. We bring it down to that low. Okay, look for that buy off of that low. It's a little bit late right now, but you get to that earlier in the day, it's a good buy. From there, though, what you now want to look for is that pullback. Mark up the first pullback, the base of this channel. So you can see it's really important that you draw the correct channel, the channel correctly, because that's going to give you the base of that channel. That now is your buy zone. Okay, now, the hard part about this is that when it pulls back into the buy zone, it's going to look very bearish. And you're going to think this market's reversed. Okay, and the reason why it's so sharp as it pulls back is because, again, the price just gets too expensive. Nobody wants to buy up there. Remember, the whole thing started off from that big spike higher. So buyers are buying pullbacks, buyers are buying pullbacks, but again, the market will turn quickly usually and pull back against you. At that point now, wait for that moving average coming over and look for that classic failure into pullback combination for a retest of that high. Okay, these are usually where the money is. Okay, the bigger money, obviously, because now you've got a nice low risk, high reward that targets all the way back up to retest the high. The most important thing about this lesson, right, is to look for that pullback. Look for that pullback. If you can get in on the spike in channel early, then great. If you can get in on that spike in channel early enough, then wonderful. Okay, but sometimes you just don't, like in this case, right? It's pretty much middle of the night pretty much for this market. So we know we've got that spike in channel up. Oh, sorry about that. Spike in channel up. There's my first pullback. There's the base of the channel. There's my buy zone. Okay, that right away now tells me we know we're bullish. I want that pullback. I want that moving average coming over. Sellers will try to sell off the pullback. It will look very good for the bears. Okay, it's not a bear market though yet. We look to buy into their stops. We look to buy the pullback for what? For a retest of that high. Again, it's a relatively sharp pullback. Gets the sellers roped in on the wrong side of the market. We buy into their stops and then look for that add-on to buy on that pullback. Now, I've also marked up, like on the S&P, that reversal line. Okay, 79.08 and change. We go up, we pull back, we go up. We almost always will at some point come back and get that level. Okay, that level at 79, we'll call it 79.10 just for round numbers sake. If we get that deep of a pullback now, what's going to happen? This market will likely be very bearish. Well, let's put it this way. The market won't have turned bearish, but it will feel very bearish. And even though we want to be a buyer here still, we still need to give those bears one try, two try, and then we can buy up from there. Remember, you can be right and still lose money. You can be right that we're going to go back up to retest the high here, but if you try to get in too early, a lot of times what happens is if you get in too early on those failures because the pullback is too strong, it'll go run you right out. And then it will go back higher. You know what I mean? That's the hard part. So you just want to make sure if it's a relatively shallow pullback, it's a failure into pullback combination. If it's a really sharp, deep pullback, again, get my eyes on that 79.08. Just give it a little more time, right? A little more time. And this is why, being with me in the trade room tomorrow morning is really going to be beneficial for all the new traders out there, because a lot of times those nested patterns, you're so excited to buy it that you kind of force the trade a little bit, and you can easily lose money that way. My kind of rule of thumb is, what I always tell my clients is these nested patterns and the crown reversals we talked about earlier, they oftentimes take twice as long as you think they're going to take. So if you think that pattern should be done in 5-10 minutes, think 20-30 minutes. Okay, it's usually going to take a little bit longer than you think it will. Now, what if we go higher here? The big problem we have overhead here is we've got this 74 quarter area. You can't see it very well, but it's pretty obvious, right? It's right there, right? That's 73. That's a big high. That's a big high. So we can definitely tell that those buyers are likely going to see this, and they're going to take this as a place to take profit. Now, it's not the all-time high, because the all-time high, if I go out and grab that bigger picture here, where was that? Where was that slower time frame? There it is right there. The all-time high, I believe the Nasdaq, maybe not the all-time high, but 8,003, you've got more to go from there, right? So it may keep going from there, right? We're not even near the all-time high yet, but we definitely have some big levels up top here that are going to be difficult to crack through. I would imagine a lot of buyers here will have their profit targets ready. Like I said earlier, though, a bullish tweet on China, a good earnings report, retail sales tomorrow morning. I mean, this could easily spark a rally higher here. So what type of entry patterns do we want to use as we go higher? The first one, right, was that 1, 2, 3 breakout. Mark up the high, mark up the low. I would love that. That would be the ideal. Okay, we get that nice, strong jump up off the open, hold the pullback and run higher, getting in now on the way up to that 8,000, on the way up to that big measured move. Or as we go higher here, strong blitz going higher, 1 try for the bears, 2 try for the bears, and because we're going to be running into some resistance up there, I'm looking for a trap low on that. Okay, again, we call this a 2-try breakout pattern, or the FOMO breakout pattern. That strong spike up has everybody wanting in on this. The bears will come in once. The bears will come in twice. I'm looking for a trap low, because trap patterns are my favorite entries when I'm concerned about any overhead levels of resistance. And you can see we've got that measured move up there. If you go back in time here, and kind of look where we're coming from here right now, you'll notice we've got 1 leg, 2 leg, and 3 legs. So that 8,000 number, again, it's not the all-time high. A little bit more to go above that. But I would imagine that's going to be a pretty tough nut to crack tomorrow. So make sure you avoid buying into it. Make sure you get that pattern, right? Either that 1, 2, 3 breakout, or right, get the 2-try breakout, as I mentioned earlier. Now, I warned you about this too. Keep your eyes on the ranges up here. If we start seeing this thing go sideways, okay, that's going to tell you now that's a range-bound scenario. The one thing you want to remember is, when you've got your trading range going sideways, the size of that range is going to determine where the buy zone is and where the sell zone is. Now, we know we're bullish already, so that's going to be the easy part. If we go sideways in here, it's just like on the S&P. We're looking for, if I can get rid of those, right? I want to see us go down, get that moving average coming over, get those sellers to take the bait. Let them try to sell that breakout pullback. Rookie traders love breakout pullbacks, but breakout pullbacks and breakouts, no matter which market, liquid markets that is, they're going to mostly fail. Okay, so don't try to force the breakout pullback. Trade into it. Instead of being a seller below that low, buy it going back up into that trading range. And again, if it really tanks, okay, if it really tanks, right, then it's 1, it's 2, and back up from there. It all has to do with the strength of that pullback. Hopefully that all makes sense. Now again, if we do reverse, it's a 1, 2, 3 reversal, right? We talked about that earlier. Want to see that strong move down, pull back to the moving average, strong move off of it. Mark that low in this case, mark that low, mark that high, and we're going to go run here now, look for that sell. Where's my target? Probably back down. Yeah, that's the low from today. Sorry, this is the low from today. So the short-term target here for the bears is back down at that 78.60. That's today's low. And then from there, the major bottom there is at 78.07. So boy, that could be a very big swing if things go awry here tomorrow on the news, right? Again, we get some big news coming out tomorrow, retail sales at 8:30 that may shake these markets up here. So now we know the plan. If it goes sideways, if it keeps going higher, remember, you want to get in before you get up to that big round number, that profit area up there around that 8,000, 8,011. Keep your eyes out for the pullback. The size of that pullback, the strength of that pullback is going to mean a lot here for the type of entry that we use. Last but not least here, let's wrap it up. I saved the best for last here tonight. The yellow metal, the gold futures. Again, as I mentioned earlier, retail sales tomorrow will definitely be something on our radar bright and early. Gold opens up at 8:20. No better way to kickstart the day than to have some big news tomorrow at 8:30. So looking forward to a nice big tradable move on the gold in the early part of tomorrow's trading session. What do we know about gold right now? We know that gold spent yesterday, that kind of half holiday, going higher here. As we go higher, we then start chopping around and going sideways. We spent a lot of time inside that sideways range. A lot of volume on this profile right now piled up around that range. That tells me we're going to probably end up, if these bears can't hold this, and again, we got some news tomorrow morning. We could also hear more about Brexit overnight here tonight. This could easily affect gold in ways that we don't know about right now. But usually when a market starts off in a range, it usually ends in a range. And in all reality, there's a couple things I'm preparing for right now. One is I'm preparing for a move back up into that range. The second thing is I'm preparing for this range to have simply shifted and be moving down, right? And basically be a new range down here. I'm also anticipating if we go lower or if we break lower. So as you can see, there's probably 4 different scenarios that you want to look for. The easy one is going back into that range. If we can go back into that range, we now have what's called a boxed in scenario. Okay, but being boxed in is a scenario where there's not a lot of space down here left to entice in those sellers. Remember, one of the biggest reasons. What's the way to put this? How do I say this? One of the biggest contributing factors to the odds or the probabilities of a trade is how much available profit is left. Okay, right now, if these sellers, if they try to sell right here, there's just not a lot of meat on the bone down there. Okay, look, there was a lot more back here. If you sold back up here, right, there's a whole lot more profit to earn on that. There's a lot less profit left to go. Okay, there's not much left in the tank, so to speak. Okay, that's one criteria. The second criteria is we see a higher low. If we see this market start to run higher here, okay, what that will do is that's going to give me a rising support trend line. Now, if you watch this newsletter, you probably know, right, kind of an inside joke that we use is that in a bear market, in this case, it's a bear move down, a rising support trend line is bear repellent, right? It is. It's like bear spray. It keeps the bears away. The reason why is because now you don't have a lot of open space, so it's not very enticing, and now you got this darn trend line in the way. And so a lot of sellers are going to see that, and they're going to go, okay, I'm done. And they're going to start getting out of their positions. Okay, once they get out of those positions, we typically see one of two things. One is the aggressive one. It's a 2-try breakout. 1, 2, trap low. You're going to know this because the market will jump. Okay, it'll jump, and you want that trap low. Okay, again, it's kind of a variation of that 2-try breakout, that FOMO pattern, where we get that strong run up. Everybody now knows where they're going. They're going back to that range, and they want in. And so if it pulls back at all with the trap low, buy it. Target is back at that big round number. Okay, now hopefully, though, we'll get the better setup. And the better setup is we pull back now to that rising support trend line. Okay, so one more time here. We get that jump off the low. We draw up now our rising support trend line. What's going to happen? The moving average now will come up like this. When we pull back to that trend line now, we almost always get that failure into pullback combination and that run back up into that range. Now, obviously, that's a lot more conservative entry, so we may not get it. So you got 2 buy patterns to look for. One is that strong move up. 1, 2 with that trap low. Again, we call it a 2-try breakout pattern. In this case, it's not really a 2-try breakout. It's just it's a short covering rally with 2 tries to buy that trap. Or you've got that hidden, right, that kind of hidden trend line here, that boxed in scenario, where the sellers literally they've got no choice. They have to get out. Okay, there's very little profit left to make, and of course, to get a rising support trend in on it, right? So failure pattern into a pullback pattern, back up as we go. If you really want to get aggressive, there's potential for a crown reversal here. So if we zoom in a little bit closer on this now, if you really want to get aggressive, we've got potential here now for this to be a higher low. The bears have now tried once. If we can get these bears to try again, little trap low here, that is called a crown reversal. We saw one earlier. We talked about one earlier, except it was on the S&P, being a seller. Okay, this is the exact same thing. The bears definitely have control of this market. But again, because there isn't a lot of open space below it, we know there's not going to be a lot of meat on the bone. There's not going to be a big carrot at the end of the stick, so to speak. And those sellers are not going to want to sell down there. They're not going to sell that low. There will be some rookies, though, that will not be able to resist the temptation. And when those rookies get stuck and you see that nice strong close back above the moving average, that's when you know it's almost a guarantee they're going to go back to retest number 2 high. And then from there, because of the situation, back up into that range is highly likely. As you can imagine, that's the most aggressive of those patterns because that one is literally calling a reversal. That's why we call it a crown reversal. Now, how do we sell this market going lower? Yeah, good question. Not easy. Okay, in case you haven't been paying attention here, that's the major low right there, right? That 1478 is the major low. The next stop from there is 1465.1. So this is no joke. This area down here is a big deal. In fact, I'm sure most sellers have their profit targets waiting somewhere in this area. So as we go down, I could easily see now the crown reversal. 1 try for the bears, 2 try for the bears, another potential, right, as I call it, crown reversal. Bears try once, bears try twice, get that, right, get that nice strong signal snapping above the moving average and back up. But again, I digress. How do we sell this market? We got to see a strong 1, 2, 3. 1, 2, 3. Show me you can actually break to that low, because I don't believe you. I just don't. Okay, we know that 78 level is a major level of support. Show me, bears, you've got the guts. Show me that you want that next level. Okay, jump off that moving average down there. I'll mark up that low, find that hidden channel. Now we know where our sweet spot is, and now we can be a seller off the high of that channel. 1, 2, 3 breakout into hidden channel pullback. Now, guys, don't forget, big news tomorrow morning, 8:30 Eastern time. Earnings season is upon us, so lots of news hitting the tape. Keep your eyes open for ranges, right, as I mentioned earlier, and try to avoid those really aggressive breakout trades, right? And don't forget, tomorrow morning, we're going to do this together like we do every morning, right? 8 o'clock Eastern time. We get together like clockwork every morning, Monday through Friday, excluding holidays. And I want to see you there with me. And guys, if you want to get registered and come join me and trade the strategy with me tomorrow morning at the opening bell, I'll put all the registration links in the description of this YouTube video. So if you're on YouTube right now, I put that link, of course, in the upper right-hand corner for our free classes, right? Upper right-hand corner for the free classes here. But if you're on YouTube right now, go right in the description. There's a link down there to get registered. That'll take you over to the website, get registered on the website, go through a short orientation, and I'll see you tomorrow morning at the opening bell. If you're not on YouTube right now, if you're on the blog, just scroll right on down. There's a big blue button on the blog at Sideways Markets that says Join the Trade Room. So grab that link if you're on the blog right now. And don't forget, too, if membership isn't quite your thing right now, not to worry at all. I get a great free trial. That free trial includes your free pass to our trade room. Okay, our free trading classes, hundreds of hours of great examples of how we use this strategy on our favorite futures markets, and a lot of great value there. Grab that free trial. Don't forget, register, learn with the free course. That way you can get the most of your time to get with me here on this video newsletter. As always, I'm always here to answer your questions. Don't be afraid to call that toll-free phone number. Don't let my ugly mug scare you off from using that live support tool right below me here on the video. Call, email, write, use live support. Whatever you do, though, get registered, whether it be with our free classes, right, or our premium classes, and I'll see you tomorrow morning at the opening bell bright and early. If not tomorrow morning, we'll come back and do it again tomorrow night, okay? Tomorrow night, Wednesday night, same time, same place. All right, guys? Have a great day tomorrow if I don't see you guys at the opening bell. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.